Taking advantage of this opportunity, we were talking with Fabrizio about the fiscal issue. I'm trying to understand it, really. Felipe even mentioned the market's optimism, but with a not-so-good atmosphere in that sense. When we look at this fiscal issue, it still leaves me with many doubts. Has the market already assimilated the magnitude of the fiscal problem? I think this is a point that's no longer even being debated, but the question is, what is the risk premium, literally, that is being embedded in assets today given this still very sensitive issue? We're seeing Congress approving several bombshell bills that are going to explode, right? They're bombshells, they're going to explode the fiscal situation. And then, could there be a correction to all this optimism?
Oh, certainly there will be. We just don't know when, right? Whether it will be closer to the elections, or if they will postpone it to 2027. We have to. It's difficult to do this analysis, and I dare say that I think perhaps nobody has done this analysis. Imagine if we had a shut-off of the tap of foreign capital entering the stock market or around the world. Certainly, our IBOV would be at least 20–30% lower, right? Maybe even zero for the year or even with a negative return, just like we saw in 2024, right? So, 2024 was perhaps an average, 2025-24 is perhaps closer to the Brazilian reality. So, it's difficult, but if we have this scenario at some point, where we interrupt this flow of foreign buyers here in Brazil, we don't have anyone buying stocks in Brazil. We, you who are watching us, are buying a little, but nobody has a significant position, right? So, and then, whenever we have one, we went through a few days of profit taking in the last 30–50 days, and then people say, hey, see, I warned you, didn't I? People started remembering the fiscal situation again. At some point the fiscal situation will prevail, right? And remembering, if there's no foreign capital inflow, we say a somewhat cliched phrase, right? We say, counter-arguments, they're buying at any price, for passive allocation, for other reasons. There are even some studies showing a lot of investment coming in via ETFs, right? Global ETFs, in which Brazil participates with a very small position. But it's not because of some homework that Brazil is doing, it's a great opportunity. It's not inflow, it's liquidity arriving here. So, when this flow is interrupted, right, it will certainly go through a profit-taking phase. I don't believe in a trend reversal. Why? Because the global flow in the next 2 years tends to be a positive flow, right? But certainly, perhaps closer to the 2026 elections, we might have a bit of that perception and then we'll say, see, I told you. The fiscal situation needs to have more weight. There's a concern, there's a bombshell for 2027, the next government will be difficult, it will need to make reforms, and so on, right? Quote. So everything else remains constant. Again, it's an extremely difficult analysis to make. But if this flow is interrupted at some point, we'll have a very strong correction. But again, I only think that we won't fall or the trend will remain positive in terms of trend itself because of interest rate reductions in the United States or around the world. That is, liquidity will increase, people will seek more risk. And here in Brazil too, we will fortunately begin interest rate reductions, whether in March, January, or a little further ahead, a little further back, we will have interest rate reductions. The investor will look for a bit more risk appetite here. We'll look a bit more at the stock market, at B3 as a whole, okay? So, you mentioned 2 points. What's the other one? You said it could fall due to interest rates abroad. I didn't understand the second one. Interest rates abroad and interest rates here, right? Interest rates here. And then, just to add a little spice, when Lula speaks, talks again about taxing dividends, tinkering with profit sharing, etc., that could also be a trigger in that sense. Yes, then, no, it certainly will be. But I think maybe it's the intensity of the trigger, right? So, imagine again, you interrupt the fiscal policy, then the market will say, look, you interrupt the fiscal policy, but you don't interrupt the foreign flow. It will say, wow, there's a fiscal policy, there's a good agenda for 2027, right? There are problems with retirees from 2027 onwards, there's taxation, it's going to start, and there's the tax reform itself, which for me will be a huge bombshell in its implementation. It will be extremely complex, this could increase the burden, increase the difficulty, right? Decrease the margins of companies. That's the big question. But certainly, adding all this information together, we may have a greater intensity in this profit taking that will come at some point, okay? But it will be a very big dispute, just like it was in 2025, because we have increasingly greater global liquidity. Here in Brazil, we will start to have better liquidity. We've had 2 years of falling interest rates and 2 years of significant falling interest rates. We will continue with very high interest rates at the end of 2027, right? They are heading towards a level close to 10%, right? Everything points to that. That is, a cut of 400, 500 basis points. At the same time, a nominal interest rate still very high. But I'm sure there are factors, but I think it will intensify a bit, in relation to fiscal policy, taxation, dividend taxes, right? And everyone's trying to escape that, right? Let's distribute dividends this year. Let's send them to the brokerage firm, so that any capital gets out of Brazil as soon as possible. This flow will be, perhaps a power struggle, right? With resources entering Brazil, but also many people wanting to accelerate. There was even a discussion, right, about the central bank at the end of the year, possibly even acting more strongly in the exchange rate, because there will probably be companies accelerating their distribution remittances this year, to try to at least lessen the impacts that we will have next year. Nobody wants to have the 2024 effect at the end of the year, right, Sarah Vale? At least the market perception is that the central bank won't let what happened last year happen again, at that peak.
When the dollar went to over $6, right? Yes.
So, if we don't have any changes, we could probably have, I'm just focusing on one factor here, but we could have a buying force on the dollar in this remittance, right? That is, the companies, let's suppose here, there's a company, I'll just take an example, again, it doesn't mean they approved what's going to happen, but for example, MOL Metal ML, its controlling company is a German company, right? And it could simply say, I'm going to distribute dividends. Then you'll receive the news, right? For example, it's different from Vale. Vale is a Brazilian company, right? But, for example, a small company, right? But its controlling company, when it receives these dividends, it will have to remit, in short, send them to its controlling company abroad in Germany. This, again, I'm talking about a single company, but we could have several companies making this decision. So, at the end of the year we could have exchange rate pressure. On the other hand, logically, we have the exchange rate pressure of resources entering, resources continue to enter Brazil, right? Looking for this interest rate differential, we still have 15% which yields a lot, right? But we may have this buying force of outflow in the coming days, right? From now until the end of the year. So it's important that we monitor it, but certainly, Felipe, we won't see the same scenario as last year. A strong devaluation of the real, right? That scenario is unlikely to happen. Whether in the exchange rate or in any asset. Hopefully, Sarah, hopefully.